All right. Good afternoon, Dan. How are you?
Doing great, Mr. Falco. How are you?
Doing pretty well. Thanks for joining me to talk about a couple earnings here.
Yeah, I love it. I love going through the earnings with you.
Yeah, so my name is Robert Falco from Real Life Trading, also with Dan Janson from Real Life Trading, and we're going to talk about an earnings reports from a company that already reported last week. That was pretty exciting. That a lot we know a lot of real life traders and a lot of other traders out there are talking about, and has been on just a fantastic run, and that is Square SQ. So Dan, what do you like about Square?
Square has been known to, especially, I think it's more advanced in the developing cashless society that we're kind of moving to. So, especially just the business wise itself. Um, I mean, we're looking at the chart right now. It just shows straight bullishness. So basically, with the overall business and just the arena that they're fighting in, you have a company that is able to give small businesses the ability to accept credit card payments and just payments in general, um, where you have especially the COVID breakout and people can't touch money anymore, and they have businesses still needs to survive and doing a lot of remote stuff. So I'm just expecting Square to just keep kind of charging bullish in general. So the overall company I like. I think we have a lot of real life traders in on the bullish direction, whether it's swings or calls or whatever it might be as well. So I think bullish is definitely the way to maintain the thought process on Square.
Yeah, I also really like the fact that Square is helping advance the cashless society. It just makes it easier. We know with the virus, no one wants to be touching cash that someone might. Cash is already dirty as it is, but let alone with a weird virus going around out there. The less cash getting passed from hand to hand, maybe lessening the chance of virus spread as well. So let's go ahead and take a deep dive. For those that don't know how to pull up actual earnings from companies, I have it open here, but all you need to do is go into your good old Google. Oh, sorry, that's the market closing, and type in Square Investor Relations. And so you can pretty much do this with any company. Type in the company's name, investor relations. You should be able to click on a site, and every company should have an investor relations page that you can go to and pull up their actual report. So they reported August 4th. We're going to go ahead and go into the shareholder letter. Now, some of these companies do a better job than others. Generally, the newer tech companies, they're going to be really cool, really pretty, have a nice presentation here for you. One of the first things I personally always look at is net revenue. So this is just their total sales, the amount of money coming in. And as you can see here, up 64% year over year. Companies like to compare year over year results. Quarter over quarter can be important too, but a lot of times there's a lot of what's the word I'm looking for? A lot of cyclical movement. And so rather than comparing quarter over quarter, comparing year over year is something that a lot of companies do. And that's what you see them highlighted. And then, particularly with Square, I also will like to look at the Cash App. So that's kind of like a Venmo or like a PayPal competitor that's out there. Cash App also allows people to trade stocks now, cryptocurrency. So Square really has their fingers in everything. So just taking a look here, Dan, what pops out to you about SQ's earnings here from last quarter?
The growth I think is pretty phenomenal. In general, for as to what they reported to what they're kind of expecting. I think that they took advantage of a few things this last quarter, which I really like. Again, turning people on to a lot of the touchless hardware and software that they have. They have the Square Register, Square Terminal, Square Reader for contactless and ship. So a lot of the companies that have really no choice to and Square's been a name for a while. So just the advancement on the technology end of things, the the consumer or the business is taking more advantage of the ecosystem as a whole. I believe uh, I believe Square actually took part in the paycheck protection program as well. So I know anybody issuing those type of loans were just getting 1% as well, just for issuing the loans. So I know they were a big part in kind of facilitating a lot of that as well. So that I think all added to their second quarter growth,
Yeah,
and probably attributed to a lot of those numbers. Yeah.
Square actually has their banking charter. They filed for their banking charter. I'd have to double check to see if they have it. But yeah, like you said, with the payment protection program, they also do a lot of lending based on accounts receivables. So, like the receipts from companies, because they know what they're making because they're processing all of their payments. One of the things that some folks were out there, or some of the talking heads on TV were pointing at, was, well, the gross payment volume. So gross payment volume, I'm highlighting right here, is actually down a little bit quarter over quarter. But you have to take into consideration, with everything closed, even the fact that it was down a little bit quarter over quarter, down a little bit year over year, but not at like 25, 50, 60. I mean, you're hearing some of these numbers from some of these other companies that whether it's their sales or things like that go down just massively, only down 15% in gross payment volume, and still able to have their net revenue up, I think was really, really good for SQ. The other thing is Cash App. So the Cash Card and the Cash App adoption being just huge growth. You can see this year over year. So this bright green is the Cash Card monthly actives, and then what color is this? Like a teal almost, like blue.
Robin's baby blue egg.
Yeah, Robin's baby blue egg is
I
the
had Crayola 64 in my pack. Yeah. So
is the Cash App monthly actives. So again, that's like if you haven't used Cash App, I would suggest trying it out. It's pretty cool. It's like a Venmo. It's like a PayPal. But you can see the growth here: 30 million people on that, 7 million using the actual card. So again, kind of like a bank account. You can go in here and read through all that stuff. But there's some really, really cool things. Seller ecosystem. Dan talked about a lot of their technology, and then addition to contactless hardware, Square in the PPP. So I know this is something Dan brought up as well. So it looks like in second quarter, they facilitated 873 million in PPP loans, providing access to financial lifeline for over 80,000 small businesses. That's pretty cool. And are they going to make a ton of money on it? No, they might not make a ton, but they're going to make some. It's just an additional piece of revenue into the business.
yeah, 100%. And again, I think, I know for this quarter specifically, a lot of their revenue did come off of the government PPP loans, and being able to drive the additional revenue from that as well. So will it be sustainable for next quarter? I don't know, but I think, I think that part will be down with, maybe unless there's any type of other government stimulus, which I know they're talking about possibly another PPP loan. So Square would definitely be able to be a candidate to sustain another quarter of maintaining that type of growth. But that's all kind of one-off based on the current events of coronavirus, stuff like that. What I'm interested in seeing is more the ecosystem that's growing around it. So I think the ecosystem itself you're getting more, they say acquiring new customers is more expensive than maintaining the ones you have. So just based on that, the customers that had the little Square app that would charge cards and stuff, they're now more integrated in the business. So I think that end of it is a stronger, it might be a little slower, but it's going to be a stronger base for them to build their business.
Yeah, and then I know the question I get a lot also when looking at earnings reports is, what is EBITDA? So EBITDA is earnings before interest, taxes, depreciation, and amortization. I hope I nailed that right. I'm pretty sure I did though. But one of the cool things
you got it, yep.
is Square is EBITDA positive. So again, they do still show a net loss. They are a growth company, but they are EBITDA positive. And the other thing that I look at when I look at growth companies is how much cash they have on hand or cash equivalents, and or well, they wouldn't have free cash flow if they're not making money, but companies that are looking at their free cash flow, but they have 3.2 billion in cash equivalents, restricted cash, investments, and marketable debt securities, as well as 500 million available to be withdrawn from our revolving credit facility. This is also something when you take a look at one of the things that companies do overall is when there's like crises or a crisis going on, is they immediately draw down like all of their lines of credit so that they have cash available. Obviously, it looks like Square did not have to do that, so that's a good thing. Just in case banks like cut people's lines of credit back and things like that. So yeah, overall, looks like great results to me for Square. I do have Square a little bit longer term now that I added, and I did sell some, on this run up, but I'll look to be adding on pullbacks. I would say somewhere if this thing does pull back and hit the 50, I know there's a little bit of weakness out there in the market right now around tech just because of the run that it's had. I mean, this thing went up from the coronavirus low about 408%. So you can say it had a little bit of a run. So if we do get a pullback into the 50, that's definitely where I'll be looking to add SQ, but I won't be looking to take any shorts.
I agree with it. I think it's a with the amount of cash that they have on hand right now, with the growing ecosystem that they have in general, I think it's going to be a bullish company, still a bullish play. Which I would expect, and I'm hoping that we could actually get some kind of a pullback in the near future. And same thing, it's looking like a buy the dip type opportunity for it.
Yeah, definitely not something I would be trying to call the top on either. Bull put spreads, put sales, calls, shares, pretty much everything bullish or even like neutral to bullish, but definitely nothing bearish because it's hard to call the top on stocks like SQ. All right, so another one that's pretty popular that's coming up, is this tomorrow after the close?
I believe Lyft is tomorrow after the close.
Yeah, so lucky number 13, August 13th. We do have Lyft reporting. So Uber, kind of the big brother of Lyft, if we take a look at that one, reported, and their report was kind of mixed. But so I think a little bit of the excitement is taken out just because Uber reported first, and they're in the same category. So some of if you're playing options, some of that volatility that Uber has, Lyft's volatility baked into it too, because it has to report first. Well, now that that's gone, a little bit of vol taken out of Lyft from like an options perspective. I pull up their option chain for Friday. Their anticipated move is $3.60. So either up or down. For those of you that have Thinkorswim, there's a cute place right on the option chain to look at that, or you just add the at the money. A lot of people ask me, how do I get that number? Just add the at the money put and the at the money call together, and that will give you the expected move. For this one, I'm looking at options that expire Friday. Obviously, reports on Wednesday, so it's pretty much all options based. So, what are your thoughts on our Lyft chart here, Dan?
The Lyft chart itself looks good. When earnings come out, anything could happen. I mean, if they have some kind of surprisingly negative number, which could make sense because, I mean, people aren't going to work as much. They're not going to bars to hang out or friends' houses. So I think Uber and Lyft both probably similarly are getting a little decline in business, I would imagine. Out of the two, I think personally Uber is a little bit stronger of a company to me than Lyft in general. So if I had to go pick, and I do have Uber long term as well, so maybe I'm a little biased, but I think Uber just has a little bit of a larger customer base, and I know that they're actively looking for acquisitions as well. So just to kind of grow the business. I know both Lyft and Uber are just, they're not operating at profits. They're constantly operating at losses. But for me, the reason as to why to pick up either of these companies would be okay, probably for a long term. And like I said, I'm leaning more toward Uber in general for a longer term, just because of, I think, the stronger base, and the fact that Uber is looking for more acquisitions. Whether they go through or not is different, but I think you just have the Amazon playbook, where just kind of operate at loss, have the brand recognition, have the user base, and be able to deliver the customer experience. So longer time frame. I like either one. I think is good. I think Lyft is going to be more a sympathy play than Uber. So I think Uber's numbers might matter more than Lyft. And as you alluded to, Uber already reported, so a lot of the razzle dazzle might be taken out of the Lyft earnings. So I don't know. I don't know that I think for Lyft we need some kind of astonishing numbers one way or the other to really break out. And if that's the case, I mean, the Lyft chart itself, as long as that holds up and it looks like we have almost some kind of double bottom or something like that, looks like a relatively strong hold, to say the least.
Yeah, as you mentioned, I think that since everybody already knows, like, hey, Uber lost tons and tons of money, like hundreds of millions of dollars last quarter with their cash burn. Their I think their revenue was down, 70 or 80% or something like that. So it's like
Yep.
we already know that Lyft is probably going to be bad. It's just a matter of how bad, and we'll show what the expectations are in just a moment, where you all can find that. But the one thing that I do like on Lyft's chart that is still holding up is right here, this abandoned baby gap. So this is a morning star reversal right here. So you have a big bearish candle followed by a little bit of a hammer candle, and then a gap up with a nice new one white soldier. So this is a morning star reversal with a gap in between. So kind of like a one candle island reversal. But since it's a morning star, they call this an abandoned baby. And so these lower wicks right here did test it, but they did not fill this gap. So as long as this stays open, I think that that's a little more bullish. But as you mentioned, anything is possible. I mean, this could easily gap down here in the next couple days once this reports, and then that abandoned baby gap is gone. But I think that a lot of the huge move type of stuff is taken out of this unless they have some type of really, really awful quarter. But if you do go to Earnings Whisperer, it's just one resource. We're not like promoting this website or anything, but it is a resource where you can look up. You can just come up, type in Lyft, and you can look up their expectations. So they're expected to have a negative 50.2% quarterly revenue. They're expected to have less earnings by 48.9%, annual revenue down by 20%. I thought it said expenses for some reason, and 67.7% of their previous revenue. So, I mean, the bar is pretty low for Lyft going into earnings.
I think, I mean, and for anybody listening to this that's not familiar with earnings, how they play out, anything like that, there could be a strong or weak company. Like if there's a strong company and people are just like Netflix, we saw a couple weeks ago now, 2 weeks ago, something like that. People were just expecting it to be, play for the coronavirus. Everyone's at home watching Netflix. They had relatively good earnings,
Mm-hmm.
but because it was already priced in, you still get some kind of sell off. So, and again, I think Netflix, maybe not this second, but eventually will be another buy the dip opportunity. I think just in general, relatively strong company, but I would imagine Lyft is going to get beat up, which I think it has, based off of the fact that, the sentiment that nobody's really going out driving. Even as we open the economy, I mean, still a little bit slower. So, but a lot of that can be priced in. So I think they would need some really, really horrible numbers to really drive it down. Where on the upside of things, even like a slight beat or slight positive news, or even the CEO getting on a conference call and saying some kind of positive statement like, hey, we think based on XYZ the next quarter, we see this kind of growth happening. I think you just need, with these type of plays around earnings, you just need some kind of positive something to hold on to. And the chart itself is looking like it's ready to kind of want to push in that certain direction. So I would be looking, if I had to play this one way or the other, again, I'd be looking more bullish on it than bearish. Anything could happen, but I think there's just so much baked into any of these already beaten up stocks that any type of good news could help send it in a positive direction.
Yeah, there's definitely different markets where, they will reward companies that, beat an expectation. And with the expectation so low, even if the numbers are bad, then this thing could definitely trade higher, even on losing, hundreds of millions of dollars or something like that. Or like Netflix, everyone expected them to do well. So even if they did well, it still sold off. So when it comes to earnings, it's a little bit tricky like that. Just because they report good numbers does not mean that the stock is going to go higher. So, and then one last thing with Lyft on the chart here, you can see it's battling with the long-term moving averages. So that is going to provide a little bit of resistance. So again, I would be bullish to neutral, probably more of like bull put spreads, or if you did want to get a little crafty and like sell a strangle, like, again, it depends on your expertise, but like sell a little bit of a naked strangle over earnings. If you think that a lot of the move, from like Uber is baked in and Lyft is not really going to get very far, there's a little bit of money out there because the expected move is $3. So, if you sold a put like $4 away, let's say you can get at 27. So you could get about 40 cents for selling a put in here. And then let's say about $4 away. So a call, let's say even like 35. You could do a little bit of like a naked strangle for a net credit to cash. And again, these are just suggestions, not recommendations or anything. If you were looking at a potential trade right now, and again, this is August 11th, the market just closed. So these option prices are not exact because they're at the close. So if you got 40 and then you got another 42, maybe you're getting like 80, 82 cents, maybe 85 cents, something like that for that strangle. So then you can take a look at whatever your break-even prices would be. But again, naked strangle is a little bit more complex, need a little more margin availability in your account, that kind of thing. So more of an advanced trade. So, this has been Robert Falco and Dan Janson from Real Life Trading. Let us know if you have anything that you want to see in upcoming like earnings reviews, something new that we're doing a little bit of. So this is our first time. We're going to get better at it and then get some feedback from not only our members, but from those of you on YouTube, or maybe even, I don't know if this will get posted to like Stock Twits or Twitter, the FinTwit verse. Let us know. Reach out to us. Shoot Real Life Trading an email. Come check us out at reallifetrading.com, and love life, live life, trade it.
We'll see you guys next time.